Howdy, how's everyone doing? So I'm going to go over what I normally do, basically every morning, and then what I'm looking for in my setup. I posted some of them in the group early this morning. Every more, I'm trying to remember what I did this morning because now everything's moved past my my marks here. Okay, yeah, that's what I did. Okay, so every morning I mark out key levels to where I think it could run. Um, so this one, when I woke up, this had this fair value gap in this 4 hour. I put it in the bottom of the fair value gap to see if I want to see this run to here if it's going to be um, bearish to start the day, and it was bearish to start the day. Then this one, obviously, this has some equal lows down here. If it runs through this, I'm going to be looking for the reversal here or a continuation pattern down to it. So so everyone sees the fair value gap that I was looking at. It's right there. And as was pointed out in the group, this had some really good bullish reaction to it, right? It's a bullish fair value gap. It reacted strongly. It cleaned out the whole thing, came all the way almost down to this order block here, and then continued back up. And this morning when I woke up, I was I posted this in the group. This was making an idiot box here on the 1 minute, right? This was pre-open. So what I was looking for was an AMD setup, and this right here is this gets a little tricky, but there's a difference between electronic trading hours and regular trading hours. Electronic trading hours goes from 6 p.m. at night to 5 p.m. the next day. So that's continuous, except for 1 hour. So what you do is you go to the regular trading hours, and it will take away that 1 hour. Um, so it took away we're in the 1 hour. So it opened. There was a gap this morning. See all the way down here. See this gap? And sometimes, not always, but this is what I'm looking for. I'm looking for that AMD to play back into that gap. And a lot of the times it doesn't fill the whole gap. So if I'm going to play a short on open, I'm going to play it to about 50% of that gap, which is actually lines up with that 4 hour that I also marked out earlier. But then we go to the regular trading hours. And so now we're back to the regular trading hours, which is I'm at the electronic trading hours, which is just regular futures hours is what we're all used to trading. So I'm looking for the AMD, and this is what I drew out this morning. I thought it's going to come here, dip down, and then continue bullish. This is the bullish idea that I had this morning. So what I'm looking for is either I'll just keep it simple. I'll do the A plus one because there is another setup that I would have played for a short, but I didn't. It was too messy. I would have played into a short into this dip down here and then look for the reversal, but I didn't play that. I didn't play any of them actually. So what I'm looking for is I'm looking for this to run down to that 4 hour fair value gap and see how it reacts. And you could see that it reacted. It almost filled the entire gap that we had, the opening day gap, and then came down and basically shark finned its way out. And that's the reversal that I'm looking for. And uh, why this one? One, it cleaned out this fair value gap here and had a good reaction off of it. It came down almost to the new day opening gap. And then what really sets it to be my A plus is there's an order block in here. And there's a couple different places you could take this. It dips down and then starts to go back up. Right here is what I usually consider my order block. a little more aggressive than most people. That red candle right there is the order block. Some people like for this, I want when I playing this order block, I want to see a red candle that wick down like this. I want to see this next candle come down and make this the oh crap, what's it fucking called? The swing low. There we go. Right. So it made a swing low here. So I'm looking to enter on this candle here, right? I want to see this candle open and drop and come back down into this green candle. So there's really not a fair value gap there. There's a couple of different entries you can take. One being the wick. A lot of people call this a wick test, right? See how it came down to that wick. You might need to zoom this up a little more. Came down, hit off this wick, and came up. Some other people like to play it off this part of the order block, which is the safer one because you get less drawdown. But as you see, a lot of the times it doesn't come down here if there's a hefty wick on this. So if you can get in anywhere on this wick, usually I get in here, right? I wait for this to come down, and then if it starts to move back up, I'll market order into this 1 minute right here because that tells me that it's going to be bullish. Um, the other order block that some people might take is this here, that whole all three of them, all three of those red candles. Same concept here. You want to see this green candle, the first or second green candle close above that, have it come back and retest a wick within it. Oops, I don't use that one. And it wicked off this one too, right? So if you miss this entry here, and then and you have another order, like a fuller order block, I don't even know what to call it because I don't know what it's called. You can play it off of this wick and continue up. Where my take profit normally would be on these is we'll use this to about 50% of the move from the swing high, the swing high up here to the swing low. So you're looking at 50%. So it's roughly around here. I might even take a little bit longer to try to get to this wick somewhere in this wick. But if you think this is like the low of the day or low of the session, then you can aim for these higher ones up here. So you want to see it come down and then fully retrace. The safer one is to take even this right here or this up here. And that's what I'm looking for. This is literally what I'm looking for every single day at open. I'm looking for it to AMD and come out. We actually had two. We have two that happened today, and I missed freaking both of them. This one, I went out of my office to take a call, and then this one, I was in a meeting and I saw it freaking forming, and I didn't jump into it. But see, same thing, right? This one is a little trickier because it's not going in. It could be. I haven't even checked yet. It could be going into a uh, higher time frame, but I'm not sure. But this one to me, I wasn't even, I wouldn't be even looking into the higher time frame. I'll be looking at this. It took liquidity here, right, and came back down, and then this made a two candle pattern. So when I see this, I know that it probably did it on the two almost perfectly, and it does. Oh wait, no, it's over here in the 2 minute, and it did, made it perfectly. This one was tricky because it didn't come back down, didn't bite back down into it. That's why sometimes I just, depending on the risk reward, I might just order in once this closes. But normally I don't like that risk. I'm risk averse, as you all know. I don't like taking a lot of risk. So it didn't come back down into that. So I might have missed this one. But a lot of times I'm just going to take that risk and let it fly up. Again, 50% of the move, you're talking about somewhere in here. But like these were so perfect, they just like kept on moving, right? There was no real wick back down into it. And then this made a unicorn setup here that I wasn't too confident, so I didn't take that. And it kind of did, it just bit around here and then didn't really go that much higher. This one, 50%. or to one of these wicks or one of these fair value gaps, right? This fair value gap here, I might have taken profit on. So basically that just 2 minute candle there is what I would have been playing somewhere in that fair value gap. Because this could have been a continuation, could have came here, hit here, and then dropped down again. And that would have been a continuation pattern to go down. But it really, it blew through this fair value gap here, and then it blew through this one, and then it just consolidated. That's a time issue though, because we're hitting noon, and you see how it just chops during noon hour. Um, the real aggressive ones are here. So what would this trade look like? Where would I have put my stop and all that? This one wasn't a great risk reward. Oh, this is a 2 minute. This one, I can't remember how good this risk reward was. So let's take a long position. You're gonna put your stop below that swing low, and then aim for anything up there, right? There's a fair value gap here. You could aim for that. Although that got wicked, this got wicked many times, so there's a good chance that it's going to fail on this reversal. See how it wicked into this fair value gap right? This fair value gap right here. It wicked in, bid in, bid in. So a lot of these orders are already filled. So there's very few orders left in that fair value gap. So there's a good chance that it's going to go through. But again, being risk adverse, I would probably take it to the top of this red candle here, or maybe if I was going to trail it, that's trailed perfectly actually. Um, I would have trailed my stop, right? I would have kept on trailing my stop to like after this candle closes, put my stop. I'll try to do this. Put my stop below the next candle, right? So I put my stop here. Now I'm in profit. I'm at break even. Now this candle closed and made a nice little fair value gap. I'll move my stop here. And then this candle closed, move my stop here. This one I just would have probably rode all the way up until it reached my actual full take profit, which would have been somewhere in here, some one of these wicks here, somewhere in that wick. Same thing with this one here. Would have trailed it until I saw that it was having trouble. I would have got stopped out in that fair value gap because it came up and then came back down. I might have closed it when I saw it wicking back down into that fair value gap. With the naked eye, 50% take profit looks like, yeah, exactly, right. So that's why yeah, and that 50. What's amazing is that the 786 a lot of the times will fall directly on to a fair value gap, right? So the 786 is, oh, that's pretty messy. Let's see if I can pull it so we can see the numbers. 786 is like right around that fair value gap. That would have been another thing that would like, you're right. The naked eye looks like that. So I'm probably getting out at that fair value gap because the naked eye does look like a bearish. It looks like it would have been a bearish continuation. What if it didn't inverse this fair value gap? It definitely, and they even trapped here because that red candle, right, makes it feel like there's another order block here. But what I saw here was not only this fair value gap, right? But there's a breaker. I'm not too good at breakers, so I don't play them very often. I usually just chart them out to see how they go. A breaker is a candle where there's a higher high and then a lower low, and then it breaks through it, like it broke through here. And usually that means that once it breaks through the breaker, it's a continuation pattern. But there's a lot of stuff saying it was bearish there too. So the safe bet was taking off any or leaving a runner or whatever up through here, up into that fair value gap. But all these other ones were getting blown through, right? This fair value gap here blown through. This fair value got blown through. This fair value got struggled and then just chopped. But like I said, you're getting close to noon. You don't want to be in this chop at all. And noon, look at how gross this is, right? And any questions? Because that's really like that's how simple my setup is, and that's what I'm looking for. You don't on NQ, right? Depending, I know Sandy likes to use micros. I use minis. You can use micros too. But like this trade is a massive trade right here. This is alone. If you take it all the way to that, it's like for one contract. Let's say 250. That's a $1,200 trade with one contract right there. So you got 1,200 bucks in 1, 2, 3, 4, 5, 6, 7 minutes. And then that's for one account. And as Sandy pointed out, you can trade, on Apex, you can trade up to 20 accounts. So 20 times 1,500 in that one trade. This trade, not as much because it's losing steam, getting towards noon, but still, that's in like say we even go there, trading view has decided to do that now. You're talking, I don't know, another $600-700 trade into that fair value gap. Again, with this one, you would, you know, roll one. Depends on where you want to go, but again, you want to put your on the swing low, target it somewhere in there, right? A little bit higher. So again, look at that good. Look how good that risk reward is on all these. These were really perfect. This risk reward was giant. If you just trailed it. Yeah, I record it. You're all good. You can watch this anytime. Yeah, I'll come on and I'll stream in the morning. It will help me stop being a pussy and actually make these trades too. But legit was out of the room with these ones. I'm actually pretty mad about it because price action has been so shit on the NQ the last few days. It's been just chop, and that chop and then it goes, chop and then it goes. This is just perfect shark fins over and over again. Okay, I'm gonna end it here, unless you guys have any more questions. I can hit any questions in the Discord too, no problem. I mean, this helps me see it better too. I was just telling my wife when I teach, I see better and I get more confidence. So I appreciate you guys listening to me ramble. Okay, see you all on the Discord.